Going to run through a number of the indicators available in our packages. I'll be speaking predominantly about the often package, and Greg will be covering stuff on TradingView. Just a couple of things to mention before we start. While I'm going to show a number of indicators that look pretty awesome in terms of results, I think the key message I want to remind everybody of is never to trade just on the basis of one indicator signal. Always try and look for some confluence of indication from a number of indicators pointing in the same direction. And that's probably an important message, particularly with regard to Rob, which is a refreshed order book. I know there were a couple of questions in the chat already about when is it going to be available. What I could say is, for me, it's ready. Ray has said he wants to make some improvements. We can debate whether it needs improving or not as we go through. But anyway, for the moment, it's not released. It's currently only running on Sierra Chart. As soon as Ray lets me know if there are no more improvements to make, then I can translate into Ninja and we can have it on both platforms. But what I want to do today is to go through a number of markets using various combinations of tools, try and guide you through the sort of narrative as I see it. I'll be using almost exclusively today's charts. One or two examples, I'll look at yesterday's charts, but be predominantly on today's charts. So there's no cherry picking involved, just whatever happened today is what we'll deal with. So I'll explain as we go through what market we're dealing with and which tools are on the chart. I'm going to start off with bonds, a 30-year bond, ZB. And on this chart, we've got the refreshed order book, VPIN, which is looking at toxic trading. There are two DOM history indicators here, but one is for the stacking and pulling, which I'm not using on this chart. And the other one is for the book line, which is the famous yellow line that everybody knows, or at least those who've been in the room recently. Pressure line, Voltic, and measured move. And so I'll refer to those as we go through so you can see what influence each of those have on the market, or our interpretation of the market at least. I've moved back to yesterday on this chart simply because Ray did present a number of signals from Rob, the refreshed order book, during his class. And I just wanted to quickly run through some of those before we move into using Rob on today's chart for the ZB. We're using Rob on some other markets as well, but we'll start off with this one. So this was, I should explain the times at the bottom here are my local time, Central European time. I'm in France, so this is 6 hours ahead of New York, 1 hour ahead of London. So this is going back to around about 6 or 7 a.m. New York time. And we had a signal here for Rob. It gives two lines, obviously the text Rob to identify what it is. The thick line is the price at which the signal was generated. Rob posts in real time, so wherever it is on the bar, when it detects the setup, it will plot the price there. And this thinner line is a stop loss, and it's a parameter you can set in the indicator. I've set it at 5 ticks. Obviously, you can adjust that depending on the market that you're trading. So that gives us an indication easily identifiable if we manage to avoid the stop loss or not. So this is a buy trade in yellow. You'll see the sell trades are in magenta, pink color. So if you jumped in on this trade, you see immediately went in your favor. And we had a couple of Voltics here. For Voltic, you may know that these numbers underneath show an imbalance either on the bullish side, which is in yellow, or on the bearish side, which is in pink. The Skype messages. So we've got a couple of Voltics here, both with bullish bias, which is good because we're hoping to go higher. The purple line here is pressure line, PL, and the green line is the V-pin. And so both of those are moving up as this trade progresses, which is a good sign. Pressure line has a little bit of a dip there, but soon turns back up again. V-pin continues up higher until we get to within one tick of this measured move. Those of you who are familiar with measured move will know that the green lines are macro levels, and very often with a high probability, price will bounce when it hits that level. At least it will stall for quite a long time. The blue lines are minor levels, but they will also have some effect on the price movement. We'll see that as we go through. But if you're in this long trade following the Rob signal, this would be a good time to think about exiting, because it's very unlikely to go through that measured move level, the macro level, unless there's some very strong Voltic in evidence at this point, showing a strong buy bias, and there isn't. In fact, we get a Voltic here with a negative value, which shows it's predominantly selling. So you should be out of the trade by that time. So if you had joined in at the signal price, which is 113.28, and followed it up to that point, then you got, I can put this on here, 114.11. So about 15 ticks on the ZB. So a good 450 or so dollars. It's a 5-minute chart, so under an hour anyway to make $450, $500. So not a bad start. We'll move on through the day and just look at some of the other signals that we got. Another buy signal here from Rob. And just before that, there was a Voltic with a bearish bias. But the V-pin was up quite steadily. Pressure line was down, but beginning to flatten and turn up. So reasonably safe trade to enter Rob at that point at 114.5. And again, there's nothing to say that the trade is beginning to falter till we get up to here. The pressure line turns down quite sharply. It's an indication that the up move is beginning to lose momentum, because the pressure line is a momentum indicator. The V-pin has also come down, is running flat at the moment, so you could at least reduce your size of the trade at that point. You may want to leave a runner. It does actually go a bit higher, but you can see there is another macro level measured move just above here, so that it wouldn't go too much further anyway. Just try and keep an eye on the chat to see if could you touch on here to set up the tick and volume delta lines using often. Cameron, I'm not sure which platform you're on. In Sierra, I have a chart later on which has the delta tick and volume lines on, so I'll probably cover it then. But in Sierra, the delta lines come as standard. They're just show you very quickly. You see down here. You see in the standard Sierra indicators, this is not often, this is Sierra chart standard indicators. So you have 3 cumulative delta bars, one for trades, one for up-down tick volume, and one for volume. So basically you'll just choose the up-down tick volume and the volume and use them with a line on close. But I'll show that later on. If you're on Ninja, then in the Mantis package, there's a delta divergence indicator, which you can use to set the tick and volume delta. Okay, so we'll move on. What else is delta? Yeah, QQQ. It paints in real time. I'll show you an example. I don't know if it's on this chart or one of the other charts, but you'll see it will occasionally signal and then effectively change its mind because the setup is no longer valid. And whichever color it was, yellow or magenta, it will change it to gray, remove the word Rob, and just show you that there was a signal there, but it's no longer valid. So something to be careful of when, indicators signaling in real time, that the setup can change. It's not always definitive. So you need to be a little bit careful about jumping in with full size on your initial trade. You may want to start off with just 1 or 2 contracts before you, so you can see how things work out. But definitely in real time. VPIN 2. There's I'm using VPIN 1. I personally prefer it. Ray obviously has his own preferences, but I find this one works well. I think you'll see on a number of the charts. You can obviously place both of them on the chart, no problem, if you want to have double confirmation. But it's a question of personal preference, obviously. Frank S, ES or NQ? Not sure if that's a question, but we're on ZB at the moment. I have charts for both ES and NQ later, so we'll go through those. Does Ninja or Sierra work on Apple Macs? No idea. I don't have an Apple Mac. Perhaps somebody else can answer. How do we get the pressure line in Ninja? It's in the often package, the Scalping 6 on Ninja. Do you feel he's using VPIN 2? No idea, Michael. I haven't discussed VPIN with him. So I'm not sure if he's on 1 or 2. I haven't actually tried to emulate his charts to see which one he's on. But as I said, for me, VPIN 1 works pretty well. So I'll stick with that for this presentation at least. Okay, so that trade worked out pretty well. You could see that it moved up to this macro level and no surprise, it bounced off. So, sorry, I'm a bit too far there. Price comes down, pressure lines down pretty sharply. We have a buy signal from Rob here. VPIN's pretty flat, so it's not saying yes or no. There's no Baltic recently showing a bearish bias. The last one was actually bullish. So this is a trade again you could take probably not too many contracts, since the pressure line is quite negative there. But again, if you had taken the trade, you would have got a few ticks from about 19 up to 24, 25. So again, 5 or 6 ticks would be enough to get you $150 or so in about 10 minutes. This is a 5-minute chart. As the price comes down, you can see we get a Voltic with a negative or bearish bias there. Doesn't actually push price down immediately. These numbers, when it's around 1 or 2, not very powerful. You see some later on, like here you had one at 5, for example. That's a bit more powerful and is likely to result in some move in that direction. But 1s and 2s, you can, take note of them, but don't expect to see a big move as a result. So the Rob trade, if you'd stayed in it, it's still in profit, only just. But then it gets a good move up. Now, there's an interesting thing in that we have a Voltic here with a pretty high bearish bias. The pressure line has dipped at that point. VPIN, though, is not responding at all. It had a down move earlier, which suggests that there was some down movement to come. But that if I was in this trade at that and seeing that at that point, I would certainly reduce size. You can see that at this bar here, it started to go up, but then you had a spike down, which would have taken out your stop on the Rob trade if your stop was still at 5 below your entry. So there are some indications that if you see something as powerful as that, you can expect it to move down fairly soon, particularly since VPIN had already signaled that a down move was fairly imminent. Just move along to the next Rob signal. So here we get a sell signal from Rob at the top edge. So same idea, 5-tick stop. The most recent signal from Voltic was bearish. So although the price had moved up a little bit, we can expect there to be some sellers hanging around. So price, you went into profit fairly quickly, came back to test the signal level, but then went down quite well. So again, depending on how long you stayed in the trade, because you had some buy Voltics coming in here, you could have got from 115.4 down to around 114.24. So about 12 ticks, 360, close on $400 in about an hour there from that Rob signal. A bunch of Voltics here, obviously both bullish and bearish, so a lot of toing and froing in that small balance area for the buyers. The most recent one was a bullish side with a value of 3, so that managed to move things up. Let's move on to find the next Rob. Another sell signal here. Again, you were in profit immediately. Pressure line was down. VPIN had been up, but started to turn down. And again, the most recent Voltic had a bearish bias, so looks like a safe trade to enter. We can go in on that one. And again, depends how long you want to stay in the trade. The pressure line flattens out. VPIN is pretty flat as well, so it's no strong indication at this point. Sorry, a little bit too fast there. Another bearish Voltic at this point. But then you start to get a bullish Voltic coming in here. So at that point, you're seeing things go flat like this. You probably decide that that's enough for the trade. Fairly profitable anyway. Let's move on to the next signal. You see, it doesn't signal all that often, the Voltic. We went to, that was the Asian session anyway. So here's the first signal from today. And this is just after the London Open, which is 9 a.m. my time, which is there. And you can see that just after London Open, VPIN makes a very sharp move down, which again is our sort of early warning system to say, be aware this is probably going to move down fairly soon. The price will move down. We also had a Voltic here with bearish bias. Not a strong one, but it's still bearish. Pressure line has been moving down, but it's turned up. But on this ROB buy signal, I would class this as being risky, particularly because of that VPIN sharp move down and the Voltic close by, despite the pressure line moving up, saying there's momentum to the buy side. And, sorry. You see if you move this along, that it actually stopped out. So if you had taken a trade, that would have been a losing trade. I personally wouldn't, having seen that VPIN and the Voltic combination so close by, I wouldn't have taken that, certainly not more than one contract anyway, because it's very risky. Okay, so that was first sort of losing signal from Rob. Then we got a sell signal shortly afterwards, and that one went into profit straight away. Again, the VPIN had turned up here, which suggests there's going to be an up move soon, but wasn't nearly as strong as that initial down move. So again, it's a level of risk. You have to decide if you want to take it. Again, I would probably enter with a small size for the trade to begin with, see how it goes. You can see it didn't go very far before it started to flatten out, but you would still have made a few ticks anyway. So, sorry. So there's the up move that VPIN said is going to happen. We had initially a Voltic with a very slightly bearish bias. It's only one figure of one. Slightly stronger bullish bias on the next Voltic just afterwards, suggesting that there are some buyers around. Let's go ahead to the next signal. Here we get another buy signal from Rob. We've got a Voltic sitting there with a bearish bias. So again, some risk there. VPIN though is flat, it's not indicating that things are going to move down. The pressure line is up, suggesting the momentum is with the buyers at the moment. So I think that's a reasonably safe trade, at least for a few ticks. And price moves up quite well. So, for all the signals we've looked at so far from yesterday and today, there's only one sort of losing trade so far, which was clearly identifiable as a risky trade. Another buy signal here, and into profit pretty much straight away. A little bit, one tick of heat before it moves up. But again, you have some indication that things are weakening. The pressure line's starting to move down, which say there's not a lot of buying momentum here right now. VPIN is up slightly, but it already made a down move here. So you'd be, thinking about reducing size or exiting the trade at that point anyway. Okay, let's move ahead. Another buy signal. I won't go through all of these in detail. It's getting a bit boring, but you can see that the buy signal made profit, the sell signal made profit. Not always a huge move by any means. Let's say we're on a 5-minute chart. Price comes down. It's the it's the measured move again. Now that Rob signal there, I would say is pretty safe because it has this macro level sitting just a couple of ticks below. And there's no way that price is going to punch through that without some very high levels of selling coming into view, which is not in evidence yet. So you could certainly take this one for a few ticks. You get a sell signal pretty soon afterwards, which would suggest to you that time to get out of the buy trade. And the sell tick, the sell Rob, a few ticks of heat before it actually goes down. But bear in mind, it's not going to go through this level, the macro level on the measured move. So don't expect a big move on the downside there. So you see this measured move did stall things here, but you can see this Voltic with a value of 12, a bearish value of 12. So there's a lot of selling coming in here. Now, there was some buying, trying to resist that and push it back up, but certainly about a quarter of the strength of that one. So not surprisingly, the price went down quite sharply afterwards. Pressure line was already down. This yellow line is the book line, and that was down as well. VPN is also down, so you know it's pretty strong evidence it's going to get through this level this time. Okay, see, not sure how many other Rob signals we had on here. So we're up to current time. So there's a sell signal here. Pressure line has been moving down. The book is actually up and the VPN has moved up recently. So that suggests it's not a good time to take a sell trade. See these gray lines here? I mentioned earlier on that Rob, if the setup during the evolution of the bar, if the setup fails, no longer valid, it will simply leave it as a gray line. So you can see there was a signal there. In this case, it was a buy signal and another buy signal just afterwards, neither of which were validated. So they were the Rob text was removed, but you could see where the signal was. But this sell signal, I would say, is a bit risky because the pressure line has turned up, the book is up, and VPN had already signaled a move up some bars ahead. So, and you could see it actually went up to the stop, to the tick. So you probably would have been stopped out. It's only just in profit at the moment. So that was Rob yesterday and today on the ZB. Not sure if there are any other questions on that chart before we move on to the next one. VPN isn't working on my Ninja. Could this be a data issue? I'd have to look at it, Rich. I haven't been testing on Ninja today. I mean, I did, before I released VPN on Ninja, I did test it and make sure it was working the same way as it does on Sierra chart. So I'll take a look at it. Maybe when Greg is in his presentation, I'll take a quick look and get back to you. But it should work. Okay. When will Rob be available to us? I don't know if you were in at the start, Matt. I said that for me, Rob is ready to go. Ray has said he wants to make some improvements. I think it's in pretty good shape as it is, but I can't release it until he says, yeah, it's good to go. And to be frank, it's been that way for about 3 years because the indicator was written about 3 or 4 years ago. And we've had lots of requests in the meantime. I've reminded Ray several times, hey, can we release Rob yet? And he said, no, it's still needs some work. So what can I say? It's it's there. It's almost ready. As soon as Ray gives the green light, it will be released. But if there are some improvements to make, I have to wait and code those and test them before it can be released. So sorry for that, but as he's been showing it in the room, he must figure it's pretty close. Otherwise, he wouldn't be putting it on his charts. But anyway, you have seen what sort of results you can get with it. As I say, that was with ZB. We'll look at oil shortly. Will Rob be available? Yes, it will be available for Ninja MP. It's as I say, I just need to wait until Ray says if you want some improvements, I'll need to code those before I translate the code from Sierra into Ninja. But for the moment, I don't want to do all the translation if it's going to change. So, but it will be released on Ninja as soon as we have a formal release and the green light from Ray. So this is CL, yeah, 1 minute chart. This is today's chart. I've rolled it back to the London Open is here. So I'm using similar set of indicators. I've got Voltic, got VPIN. Haven't put the pressure line on here, but I just wanted to show Rob working in another market. So here you've got a buy signal. VPIN is down pretty sharply, so it's again an element of risk. We've had some buy Voltics on the way up here, but that sharp move down on the VPIN is a worry. So you wouldn't expect it to go very far, and it doesn't. It only goes 4 or 5 ticks before it reverses, and that would have stopped you out if you were still in the trade. So yeah, possibly a few ticks, but again, it was a risky trade to take. We'll just move through quickly. It's just to give you an idea of a different market and how things work. Here you can see price, as usual, came up, banged its head on the measured move macro line. You get a rub signal here, which, bearing in mind that macro level is there, is a pretty safe one, and it goes into profit straight away. Now, although that stops out, it went above your stop loss. If you had it at 5 ticks, you may have adjusted it for oil, which is a bit more volatile than ZB. But one thing is that if you know that, for example, you've got this macro level here, the price is very unlikely to go straight through it. You also have the VPIN heading down quite smartly. We also had a Voltic here. The most recent one is bearish. So even if you were stopped out, there's a good reason to get back in at the same price and take you get some ticks of profit. I mean, price comes back up, it hits that stop loss again to the tick. If you were at 5 ticks, I mean, you may have moved your stop loss by that time. But again, with all this, I mean, VPIN still heading down at this stage, you still have the effect of this macro level sitting right above. No reason not to go back in on that same rub price. It moves down quite well. So it just needs a bit of experience. As I said at the beginning, it's important not just to take rub on its own and just trade with each signal. You need to look at other things in conjunction with it, so you get a pretty consistent read about the direction price is likely to take. Okay, let's see. Not a lot of ROB trades on CL today. I think some of the other indicators would have given you more signals. I'll tell you, these measured move macro levels, you see price come down like this into this level. It's a pretty safe bet to take a buy trade here, because it will almost always bounce off that level. May not go very far, but it's very unlikely to go through that level without seeing some massive selling coming in. I mean, here you've got a bearish voltage, but it's only a value of 1, only just over 1. So it'll have no effect on the price. So you would have made a few ticks just on that bounce off the measured move. Here's another RUB signal. So again, at the bottom edge, the V-pin has been down quite sharply, but we've had the down move already, and V-pin's starting to move up now. Nothing else in terms of voltics in recent proximity, so I think this one's good to go, and it moves up quite well. So from what, 67 up to around 82, so you could have got about 13, 14 ticks anyway out of that in about 5 minutes. Another buy signal here, also went into profits pretty much straight away. Another buy signal, again was profitable. See these measured move, you always get a bounce. May not be a huge bounce, but you know, if you saw the up move come to a halt here, you see some bearish voltics at the same time, you could go in for a quick short trade of a few ticks there for a couple of minutes anyway. Won't spend too long on this because I know this is not the most exciting thing to watch. Another bounce off a measured move there, went down quite strongly. Here's a RUB buy signal, comes in here. Now the V-pin was down quite sharply, but then came back up again and down again. So again, you may want to watch and see how this is working. There was no bearish vaulting. I should have put a pressure line on here to get another confluence, but anyway, it would be worth at least putting 1 or 2 contracts on here, and you can see it worked out okay. Didn't go huge distance, and that's the influence of the V-pin, but at least you would have got a few ticks of profit. So you can see it doesn't, Rob doesn't post a lot of signals during the day. It's pretty picky about when it signals. A sell trade here. The V-pin's been on the way down. There's no buying in evidence recently, so pretty safe to go short there. Okay, I think may not be too many more. There's buy signal there, but whenever you see that sharp V-pin move, it's risky to go into a buy trade, put it that way. I mean, there's a bearish voltic, fairly strong, 3 at the same point. So I personally wouldn't take that ROB trade. I mean, it eventually went into profit, but you would have been stopped out before then. There's another buy signal there, but look at that V pin just ahead of it. So there's no way I would take a buy trade here. I mean, on that bar, it signaled at the bottom. So if you had jumped in straight away, seeing the signal, you could have made a couple of ticks or at least got your stop to break even. But it's not a safe buy trade. As I say, when things start to turn around, if you see VPIN starting to move up, if you had other, like the pressure line moving up, the book moving up, at the same time, you may decide to jump back in at this point. That would have given you some profit. Okay, I think we'll another sell trade. It worked. Okay. Buy trade. Again, it worked. Another buy trade here. Went into profit, but not for long. You get another buy trade right in the back of it, which managed to catch this big up move. Another bounce off the measured move. And then we got a big down move from VPIN. And another up move. I'm not sure if there were any more. I've got a sell signal from Rob here. So, yeah, made some profit. There's another example of a Rob trade that was signaled but then invalidated. It was a buy signal. Would actually have made a few ticks, but nothing spectacular. And that's us up to date. Any more questions? Dennis, I'll check out VPIN a bit later, maybe when Greg is on his presentation, and just check if there's an issue with VPIN 2. As I say, they were both tested before release, so VPIN 1 and 2, so we'll check. Anyway, moving on. Don't want to keep Greg waiting all night. Now, what have we got in here? Again, I've moved back to the London Open my time. And what you're looking at is a thing called the Interns exercise. And what those of you who are maybe a bit new to the class may have seen some of the intern exercise classes recently. It's something that Ray covers quite early in the structure of his classes because it's, as the name suggests, the interns exercise, what the interns get to trade when they first join the prop desk. And it's essentially looking for a breakout trade, which, as Ray says, is probably the worst trade in the world. But occasionally it can make you some money. This is not meant to be something that you would trade on its own. This is really there to help those who are maybe a bit new to the exercise and new to Ray's classes, to help them see where the intern exercise signals would be while they're trying to practice on their own charts. So what this indicator does is it will signal with a price at the point where it detects the setup is valid. Yeah, it draws a line across there, and it then plots this diamond shape on the bar that breaks that level. So as I said, it's a breakout trade, and so we're looking for it to break that particular level. And So you would set your limit order there, and in this case it worked out pretty well. We had another one down here, same deal, prints the price at which the setup is identified, draws a line across, and once that line is broken, you get this diamond shape. And again, that worked pretty well. They don't all work that well, so just started from the London Open to let you see. So those were two sell signals. Here we've got a buy signal. So one 1953.6. The line was broken a couple of bars later, and you took some heat if you stayed in the trade, but eventually you moved up. There was a second one just a couple of hours afterwards, which was triggered at this point, and that moved up as well. So I won't go through every one of these, but you can see that in general, it'll work for at least a tick or two. I mean, there's one there. It only went one tick before it reversed. So that wasn't particularly successful. But sell trade here, which went down pretty well. So as I say, this is really just there to give the newer traders a bit of guidance on how to use the interns exercise, how it should look if you're plotting on your own charts. I mean, as Ray says, you need to practice this yourself. So this is merely a check, if you like, to give you some guidance on whether you're hitting the right places or not in terms of your interns exercise. There are some other indicators you can put on here to see. Once you get into something like this, then the breakout trades are a mess. I mean, you get a sell signal here, it goes one tick and then it reverses. You get a buy signal here, and again you get maybe two ticks or something before it reverses. So trading in this sort of choppy environment is really you just end up losing money on these breakout trades. So especially when you see the two lines, it uses two moving averages. One is I think the 200, which is the green line, 200 moving average, and the other one I believe is the 50 moving average. Now, when you see the two of them locked together like this, price isn't going to go anywhere. You're not going to get any trend with that sort of pattern on the moving averages. Once it starts to separate, then you get some price movement. Okay, so there are some things you can put on the chart to give you some guidance. One is BSG, which is before she goes, which is the second trade you get after the interns exercise, and the faithful pressure line. And some of those will give you an indication about where price is likely to go. Here on the way down, BSG said, yes, BSG is also looking at breakthroughs of particular levels, but it's flagging those ahead of the break actually taking place. So that will give you some indication about which direction. Pressure line also, you had a down move here, but you saw it starting to turn, then it goes up. Now, in this area, it's sort of down, then up, then up. So it's not clear which direction it's going to go. We eventually get some BSG signals consistently on the down side, which should tell you to stick with the sell signals rather than any buy signals. Here you get BSG pointing up again, up again. So those sort of things you can put on your chart to give you a bit more guidance about which way to trade or which direction to trade, rather than just rely on the interns exercise. But as I say, the reason for putting this indicator on, it's not yet released because I need to get Ray's approval to release it. But the reason for providing it is to help those who are a bit new to the classes to do the exercise and hopefully do it successfully. Okay. I don't know if let's see any other questions on the chart so far. Yes. So this messy looking chart is what we've got in here is the yellow line is the book. Then we've got the tick delta, and got the volume delta in blue, and DD is the delta difference between the tick and the volume delta. And very often you can get some good signals, and if these things are moving together, or if they start, or one of them starts to diverge. The other signal that's on here is a thing called PREV, or price reversal, which is looking for, as the name suggests, price reversals. And it's a short-term indicator. We're on the 1 minute ES chart. But it's predominantly a scalping indicator, so it's not something you'd look for major moves. But for example, this is a sell trade. You get a few ticks down. The places where you see a bar there, but there's no triangle, is a bit like Rob. That it'll print in real time, but if the setup becomes invalid, it will remove the triangle. So again, you have to be careful about trading any indicator in real time. You need to look at some of the other stuff to see if it really is bearish or not. And then you can see that the tick delta and the volume delta both up there. The book is pretty flat at that stage, so it's not giving you any indication. At the top edge, you got another PREV signal, bearish. So that one's okay. Here the delta difference is starting to move up when the volume is moving down. So sometimes that can be a good buy signal. It didn't go too far there before it reversed. But again, you would have got a few ticks out of that in each case. Again, as I say, it's a scalping indicator, so you don't stay in the trades too long. It's we're up to current time, so I don't think there was anything too much of note earlier on in the day. I didn't put the book on until the afternoon, my time. But you know, some of these PREV signals, provided you get the other lines giving you some confirmation, they can work out pretty well. I mean, here the delta lines are all down. The book wasn't active at that stage, so that buy trade was pretty iffy. Only went a couple of ticks anyway. So it's another tool, but like I've said with everything else, you never trade with one tool on its own. Always look for some confirmation. Okay. I don't know if anybody trades the micros. This is micro S&P. But using the same sort of signals as I had on the ES, working exactly the same way. Measured move, as you can see, each time it comes down there, it will bounce at least a certain level. So worth taking a few ticks of profit when you see that sort of happen. Okay, I think we're already past the hour now. So what else do I have? NASDAQ. Don't think there was anything too meaningful on NASDAQ, but there was. It's just because it moves a lot more quickly than the other markets. It's worth having a look. Again, you can see that measured move there. Prices spike up there and then bounces off. There's a minor measured move level there. I don't know if you see it in blue. and price did the same thing, comes up, touches it, and bounces off. So those sort of things, no matter which market you're in, can be useful. I think it's always worth keeping an eye on the Baltics, which direction they're heading in. If you see any with particularly large values, either large negative values or large positive values, then it's worth taking note of those. Another bounce off the measured move levels at the top, and this one. So I think we'll call it a day there, so that Greg doesn't fall asleep waiting his turn. For any quick questions, I'll take them now. Otherwise, I'll be around until the end of the session. So if you think of anything else on the way through, then feel free to post it in the chat.
Thank you. Thank you so much, David. It's so valuable to go through this. And this is, guys, why I wanted to have David come on and have Greg come on, because we have the best tools. And if anybody knows, that's one of the things that I've been saying to David. I really, really wanted to have him come in and put the showcase the measured move, because it's such a good place for where using as a framework where you want to be planning your day for taking profits or looking for pullbacks and different things. So I hope you guys are really taking notice of that, and that sitting back going, this would be really nice to have on my chart. So thank you for that, David. And Frank, all he wants to know is, come on, just, I want it. Here's my money. Take my money. Take all my money. We'll be getting to all the different, we have several different options on the packages, and working with Ray and all of that. I'll cover that at the end. We're going to let Greg come on. David's going to he's going to silence himself, and Greg's going to come on, and then David said he would come back and answer any questions. I think we've got, hey, David, you may want to put, mute yours. I think we're going over each other. Or maybe it's Greg, one of us. We'll let Greg come on. And then now here's the difference. Some of you guys were asking, will these be on TradingView? Cannot be. Certain things that David has done, and the reason they're done, anytime you see Ray with a black background, that's going to be either Sierra charts or it's going to be Ninja, and that's going to be your order flow and whatnot, because you can do depth of market and all of that. You've got the book. You don't have that in TradingView. So now you're going to see some different tools based around structure, and my favorite RGL. And that was the one thing that I had reached out to David and why he put the measured moves in there, because it gives, well, he had already had the tool, but highlighting it in this way so you can use it as your framework with the RGLs and whatnot is super, super powerful. It really is going to give you a lot of confidence to build your trading around. So he'll be showing what he's done on TradingView. David's done all the work on Sierra charts and Ninja. There's very specific reasons for that. So now you'll get to see what we have available for TradingView, because Ray does use TradingView a lot for showing value. A lot of the lines that, if you've seen some of Ray's work, if you're new to us, you'll think maybe they're indicators, but they're actually, compare studies. But Greg's going to show you the work that he's done. And here's my new favorites to go along with the RGL every day. You'll see Ray's always putting out, Kim or RGLs. It's a perfect place for a trader to build confidence, get a base, get a foundation. Greg's going to go into this, and then the new tool that we have, which is the supply and demand. We have a couple other things coming, so he's going to show you the work that he's done. So thank you, Greg. I'm going to mute and let you come on here, and then we will answer questions, and we'll let you know if you're interested in working with us and the different tools we have.
Thank you, Kim. I'll just do an audio check. You hear me fine?
We hear you great.
Okay, great. Fantastic. Thank you, David. You did a great presentation. That was fantastic. I love the tools. I'm even in the process of bringing back Sierra charts on top of NinjaTrader. So anyway, we have some new tools. We can review anything you want as far as the older ones that everybody's seen as well. But the new one that Kim was just referring to, we probably should have called it supply and demand. I called it VNN. It was just my first reaction to naming this thing. And the V and the N comes from the creation of the finished auction, whether it's a V shape or an N shape. So I know that may have confused some of you that haven't been in the class or haven't seen Ray talk about it in a while. But he always talks about the V's and the N's. And what they actually are is the closing of an auction. So if you see a pivot here, and then when this auction here closes at this point, you now have a V shape. And, over here, let's see, here's one here. So if you want, well, that's a V. Here's an N, right? It's the upside down V. So here's the pivot, comes up, comes down, and it closes right there. So that's how we ended up calling it the V and N shape. And we named the boxes demand, supply, and demand. It's fully customizable. If you don't like the word demand in there, if you don't like the colors, you can take them out, change the colors, whatever you want to do. Each box also has a midline. Ray had said in one of his classes that if we break the midline of a box, we're probably going to go to the top of the box, or break the top of the box. So that's why the midline is there, and that can be customized as well. So the issue I had when I was building this was, I didn't want 9 million boxes all over the chart. So when Ray had first put it on his screen, he was wondering why some supply and demand boxes weren't showing that he thought should have been there. Well, that's in the configuration. So you can go into the configuration and define several things. So this would be how you define your fractal. So in this, you want how many candles to the left. I have it set at 10, and how many candles to the right. I have it set at 3 currently. So that means it will identify any fractal that meets that criteria. And then we don't want lines carrying on forever, so I put in parameters on carrying these supply and demand boxes to the right when they're formed. And then the rest of it is just customization. So how does it work? The box begins at the close of the V or the N. So if you see this pivot right here, this closed right here. So when it took this measure, it began that box, supply box, right at that point. Now that supply box will go to the right of your chart. Now, actually, when that was formed, you're on the right hand edge of your chart. So it goes until the full box is broken, and then we'll stop the box. Otherwise, I'd have boxes all over the place, but that's the logic that we went with here. So you'll see them on top of each other, and that's only because it's different V's and N's being created below, and that's where you get the supply levels. And they work. I mean, you can see it. Even when you get them overlaying, because you have multiple, in this case, N's creating all this demand down here, it stops the market. And when it comes up here, you can see it stops it here, brings it down, stops it here. And all of these boxes are created well in advance. So it's not like, well, it saw something and went back and created it. So it became a great tool. I use it. it stops me from trading in between. A lot of times I'll see, well, I got a pivot up here. I might have a ledge up here, but I'll look for the measure. And when I get into the measure, if you put your value lines on it, um, just for an example, in here, this is the VVIX. When you see this value line, stopping from going down, and you hit this demand level, that almost reinsures you have to get in this bottom edge to take this back up. And then the opposite happens. Well, where do you get out? Once you see supply coming in, you have to decide whether this is continuing with your value to keep going through the box. If it breaks your midline, are you going to stay with that trade? And when you get up into the next supply box, has your value line stopped and pulled off? Well, maybe it's time to get out for some kind of retracement. It works very well. I've been using it, and I showed it to Ray. He seems to like it. It's been on his charts every day. So this is how we're rolling that out. Does anybody have any questions? I'll look really quick over the questions. Now, I will say this. The indicators that I build, if you have any suggestions how to make these things better, certainly we have a Skype room just for these trading view indicators. Put your comments in there, and possibly, if it can be done, we can certainly edit if it's a reasonable thing that would make it better. But as you can see, and then whatever time frame you're on, naturally, since it's measured off the VZ in the ends, it'll work on any time frame. So could you please run it in replay so we can see how it paints? I could at the end. When we get done, if I can figure out how to do that, we can try it. Okay. So let's just move over to this screen. And of course, everybody knows what this is. This is our famous Raise RGL version 5 that we've put together, and shows it's Kim's favorite as well. You hear her every day talk about it, but you customize it for each market. So we're on the ES over here. Later, I'll pop it on the oil chart. And each market has its own times that you set for the RGL levels. And naturally, RGL levels is, red, green level above your long, below your short. And what this indicator does, it has these bands that goes through to give you support and resistance. And this yellow band is what Ray refers to as VWAP, its version of VWAP. And if you watch it, price retraces to it, bounces off it. And clearly, if you're in the red, this is the way to go. When you are in the red zone and you break above the VWAP, well, you're probably going to head back somewhat close to the original RGL for the time period that you're in. The candles are color coded to help you stay on the right side of the trade. When you get above VWAP, you start turning green. It's very useful. It's on my chart every day. I'm sure most of you are using it. Ray uses it every day. I wish I knew who put the document together, but someone did put a document together in the room. And if you're in the room and you give me a message who you are, I will definitely give you a shout out. But this document was put together as well, and we can post it on the site that goes through most of it and explains the little bits and pieces of it. So that was that. Now, the objective to most of these things is to overlay some of these indicators one over the other. Now, within this RGL indicator, there's an option called raise ag levels, vertical lines that come in as aggregation points. I have it turned off right now because I built another indicator separate from this one that's just a bit different. It adds a little bit more. So I'm going to just shut this off, and then we'll put them both back together. Okay. So this one is called ag program levels. So these would be the exact same ag levels stripes that come on that Ray uses. But what I did was, in one of his classes, he input the level that the ag comes in at, so you can see it for the pullback. So for an example here, we got a red stripe that came down, So where do we enter, right? We want to enter on a pullback into one of these ag levels. So as you can see, as soon as it pulled back into the level, it held it and came back down. Again, here we get another ag stripe where what happens, it pulls back to the level and continues. When you get multiple reds, you're in a down market. When you come back to the greens, you have to check and see you're possibly going to start either leveling out or moving up into an up market. Where you see the yellow boxes, this is where this was my version of what Ray refers to as when you get the stripes come in at the same level. So where you see the red boxes, that means we're getting ag levels coming in at the same level. Well, that's signifying some kind of change is going to happen. You should be watching out for it. So what I did was this indicator. So when I lay it over that RGL indicator, instead of using the RGLs within the ags within the RGL indicator, as an overlay, you can see how it works. So in other words, when you're in the red zone, right, and you get the red ag and you're coming down, well, where are you going to get back in? You get a pullback either to right here where those ag levels were, those red lines, and the VWAP, perfect place for an entry. So when you come back down and you start getting the green and this yellow, well, the yellow wouldn't come in until it closes here. But when you get the greens and you get the pullbacks on these greens, you probably want some kind of value line on here. I don't know if I have a value line I could put on real quick. All right. So as your value is coming up in here and you're with green ags, you got to be very careful on what trades you're going to take, even though you're in the red RGL zone. So these tools, when you overlap them and put them together, Mike, you're seeing a lag in the screen. Kim, is there a lag that we are dealing with here? Okay, maybe Kim took a break. So I'll continue on. So the idea is when you overlap some of these tools that Ray's put together, it ends up coming out pretty good to trade with. Remember, the tools are to reinforce Ray's teaching. It's not a shortcut. It's not buy and sell triggers or anything like that. You still have to use all of your knowledge into these things to actually place your trades. But it makes the levels visual to you to see exactly what's happening. Rich, what time should we be adding to the RGL? Each market is different. In that document that I showed you before, there are times in there. You go through Ray's teachings. I mean, naturally, it's always going to be, the market open and close of each market that you're in. So we can probably try and put some kind of document together. I have my own that I use. It's on a different computer, and it's an Excel spreadsheet I probably can post. But these are these indicators that work out really well. So I'm just going to clean this chart up 1 second and show you something else. Just a small tool that I built. Ray had shown it. We called it the Nash equilibrium. So what this tool, let me just take this off. The Nash equilibrium, I'll leave the lines on it at first, and then we'll try and straighten this out. The green line and the red line is the distance of the candle projected forward on top and on the bottom. So when he talked about where would you place, when we did the whole exercise about where would you place your bid and offer, that's how he was coming up with those bid and offer levels. So what I figured I'd do was build this. If you want to keep those lines on for your bid and offers, that was fine. But what I do with it is I take it and I actually turn these candles a better color to see. I'll turn them so you can see them. And I turn off the lines if you don't want to use them for bid and offers. And what it actually shows you is where that Nash equilibrium is coming in for. Into. So if you see these black candles coming in, you can see usually they come in at a level where the volatility is contracting And when you put this on top of some of our other indicators, it really gives you some levels. So it's not that you're going to get some of these in between somewhere out of nowhere. It's just giving you an indication that in here we're slowing up, and it's going to get pulled back. Over here it's slowing up, going to get pulled back. Over here it's slowing up, going to get pulled back. So it's just a little indication, but when you overlay these things on top of each other, they become more powerful. So um, if you put the VNN boxes back on and you start seeing a Nash equilibrium indicator coming into that supply box, it's something you just want to start thinking about. Or when you're coming into a demand zone and you don't quite get there and you see one, maybe you're not going to possibly get there, but you have to put the value line back on and see how that plays into it as well. So what else can I show you? I'll move on to just a couple of things that I did build. I guess I don't even think Kim has seen this, but sometimes there's so much to look at. I build things so I can just get a quick visual view on what the market is doing and what side of the market I should be on. So this is just a quick tool that I put together. If I could price out of the way over here, let me see. Well, anyway, you can see it. So it takes, on the input screen, you can put your value lines in. I know everybody has seen the value line. Maybe I should show you that first. This box that we created to show you all your value lines and what they've done, however many bars back. And you can set this however you want. If you just want to look 5 bars, 10 bars, 20, 50, 100, you can do it that way. If you just want to look at the last 5 bars and put 1, 2, 3, 4, 5, if you're on a micro chart, macro chart, however you want to do it. But this will tell you what your values are doing graphically. So when I'm looking at this in the corner of my chart somewhere and I see this thing all turning red or all turning green, it's just giving me a quick visual on what side of the market I should be on without putting 15 lines on my chart to see what all these values are doing. So in addition to that, I built that second table that I just had on before, this table, to tell me, is the tick above 0 or below 0? Is my Z-score above or below? And they're color-coded green and red. Time segmented value, where I am with that. Am I above or below my daily pivot? I use the DMI thing to see if there's more buyers or sellers in the market. Right now, if it's green, there's more buyers, 19/8 with the buyers and sellers. You're at low, at high, where that is above or below. Your advanced decline. I use another thing I put in here, this indicator from Trendolo. I don't even know how you pronounce it. And then also I put 3 reference times in there. So am I above or below the 6:30 to 7 o'clock Eastern time bar? You can change this and configure these any way you want. The 9:30 to 10 o'clock in the morning bar and the 11:30 to 12 when Europe closes. Am I above or below that? So it just gives me a quick view without going back and looking at levels and everything else of where I am during the day to give me some justification on what side of the market I should be on. So where else can we go from here? Okay, those were the 2 charts, so we can go back on them. We did the VM box, we did these. Michael changes most recent bar by bar. That is live time data. That changes with live data. However that's flowing, that is live time, those charts, however you set them up. And it's fully customizable. I had what you just saw there was for the ES. You're doing a different market and you have a whole set of different value lines. You can customize it to whatever value line you want. So I don't know if some of you noticed, but on Ray's chart lately, when he's been showing the oil, you'll notice in the background some buy and sell labels. And this I had named my Skew RSI indicator. This was a massive undertaking that I took to build. It's very complex, but what it does, it takes all of Ray's knowledge and teachings on his skews for each market. You can set it up. He's done it for the the bond market, the gold market, and the oil market. He's even done it for the ES market, but to be honest with you, I haven't tried it there yet. And it gives you, when those skews are following the rules according to what he has taught, it's going to give you that sell signal, buy, sell, sell in real time. Now, this is also fully customizable. So you can set this up any way you want. It's based on volume. I'll just give you a quick glance at some of the settings in it. You got the end vol in here. So basically, unless you have your volume in there, it's not going to give you a signal. If you want to just buy signals or just sell signals, depending on if you feel as though it's a buy market or sell market, whatever side of the market you want to be on, you can set it up that way. I set it up where you can put in 5 regular skews if you're just dealing with regular skews. And then I set up this section for if you're using the RSI version of skews. So in this section, what you can do is take a look and define what type of bubble you want between those lines. So right now I have it set between skew 6 and 7. I'm only using on this particular example. I want the bubble to be at least 10 points between those two skews before it'll give me a buy or sell signal. My skews that you set in, the RSI length is based on the close, where it uses 8. If you want to change that, you can change that. And then for a buy signal, this particular skew has to be up, and for a sell, it has to be down. And then I also put a look back period in there as well. So if you want to do more of a macro look back, you can do that as well. Now, Ray made a comment this morning that the eye can see more than an indicator, and this was my attempt to look at that in a more macro view. So it does, if it didn't happen on this exact candle, but yet we can compare it to a couple of candles before, and it's still valid, we'll get the signal. When we talk about up and down, we also add options where the C stands for constant. So it's either up or the same, even, constant, however you want to name it. So, and then I also put in when the skews are on that RSI chart. I don't have the RSI printed on here, but if you want the skews to be above a certain RSI, so if they're overbought or oversold, you can even limit it and filter by that. So right now I just have them over 50 and under 50 for the buy and sell, and I have both skews set the same way. He's had it on his chart. I gave it to him to help customize the settings and optimize it, or maybe come up with different skews for each market that would help us. So I'm waiting back to hear from him to see what his input is on that. But it's been working fairly well. And as you can see, sometimes you do get runs where you get some bad signals, but it will bottom tick the market. It will top tick the market. And sometimes, when you get them in between, you're still going to get out with a +1 most of the time. Maybe this one here wasn't so good, but the thing is, if you put other things, when you layer your other indicators on here, when you get a demand here and a buy signal, and then you come in here and you're in supply with a sell signal and supply with a sell signal, it helps a lot when these things come together. If you put your supply line on and use this as well, you can also see, you can say this was a great buy down here, right? You have your supply line going up, you're in a demand zone, and you got a buy trigger. You got this whole run if you stayed with it. So I know if the Nash equilibrium, if you wanted to put that in there as well, you can see once you get in these supply zones, you're going to start getting black boxes forming on this buy signal. If it's a doji candle, I actually print a big black box because there's no candle to print black. And then of course, if I didn't overlay raise RGL, Kim would yell at me. But so when you put all these things together, it really makes a lot of sense. And you can sit back and it helps you. It keeps you out of trades that I normally would have taken because you're in the middle of nowhere. But when you put these lines on and zones on and different things on, it really can help. So I know I have 17, 18 indicators. I'm in the middle of building another one now. So let me see if I can catch some questions in here.
Yes, and don't forget the RGLs.
Yes, I mean you mean the plain RGL indicator, Kim?
Oh, no, no. I was just joking about it because
Oh
it's
yeah,
so valuable.
it
Look at
is.
that.
I mean it
Look at
just
that.
this. Remember, this is created way before any of this price action, and when it comes up here and it hits the RGL along with your VWAP, I mean it just stops price. So when you see a supply line coming down, your value line coming down, and it's negative, you know you should be on the short side of the market. You got red candles and you come up into this zone, into these bands and this VWAP, you're still on red candles. Especially you come in here and you have supply zones in here. I mean, if you got to take that trade. So what have we missed, Kim? What should we do?
I think we can ask some questions.
Yes.
We have some really good questions. Now, I will just say this. I'll have Greg mute himself for a second
Okay,
because I
hang
can
on one
hear
second.
him.
Okay.
There you go. I was going to say when we're talking over each other, then that will come through so well. But I absolutely love, and I hope you guys, some of you that are very, very new to us or, you know, are coming in because it's indicators, I hope you can see the power of, you know, both David and Greg, and we have a number of other traders in our group that have built tools, but they've built them to fit what they want to see in the market. And I hope you could hear that from each of these guys because that gets so missed in this space of traders, you know, are normally buying a tool because they think it knows something they don't, and they will rely on that. Ray wants you, and he's taught these guys, he says you should be able to see it yourself. He was saying that about, you know, the Rob, you know, as people were asking about it, saying, guys, you can see this for yourself. So, like when David started putting the tools together, and Greg and any of the other guys in our group will tell you, they did it just so they're not missing something. It's not that they think these indicators know something that they don't. It's just it becomes their assistant. So they have an executive premium, whatever top of the line assistant, but they know why that you know that they should be getting either a buy or a sell or something's showing up. And especially Greg and I were talking about this the other day on Saturday when we were looking at all of this. You take the framework, the blueprint that you have from these tools, because TradingView is limited in a sense because you do not have depth of market. So then you know, to get those pristine entries, then you're over on David's, you know, packages, and then you know you're able to have like you know see a Baltic and see a certain sequence. So you're you know you understand then why you know our traders in our group can get these entries with 2 and 3 tick stops and whatnot. And that's not really heard of in this space. But when you know exactly what you're looking for and you're able to identify it, as I said when we first started working with Ray, what jumped out at me is not only does he give the how, but being a quant and, you know, a bank trade model strategist, being able to give the why. So as you're listening to the rest of these guys and asking them questions, think about it in that way, because what you're seeing here is, you know, the mastery of learning the lessons, understanding what the market's going to do, and building the tools around them. And I think it makes such a difference, and I think it's why we have so many of our traders that can make that progress. And, you know, I know everybody, you know, is looking for the easy button, but, you know, while these tools are really good, the understanding behind them is what makes them great. So anyway, Greg, you can jump back on. I just wanted to make sure that people, you know, can truly appreciate what you guys have done and built because it's so unique in this space. I think we have very, very unique resources for traders to use.
Yeah, I agree, Kim. And it's not only one indicator, it's when you put them together. And basically, it's putting all of Ray's classes together. When he teaches a class, sometimes what happens, and it happens, this is how I began building these things. Uh, I'll be the first to say he taught something maybe 2 weeks ago, and you just forget. It's just hard to grasp all these things. So by putting these on my chart, not only does it help, it sticks right in front of your face, so you see it, you don't forget it. The levels, the color coded things that I do with the tables, it's just things that when you look at your chart, remind you of everything that he's taught, and don't forget it. Because there is a lot. There is so much. Remember, we've been in this class for what, 7, 8 years now. You realize the amount of information that he's covered. Yes, he goes over it and over it, but to retain it. And you can hear him every morning. He'll go over something, and 10 minutes later, he asks us about it, and you just can't grab it real fast. So this was my attempt to retain the information that he gives, and it works out well for me. And I'm perfectly willing to give it. Kim can work it out with everybody to get access to it.
Thank you so
Uh,
much.
yeah.
Yeah, we'll definitely be covered. Does anybody have any specific questions on the trading view or on David's order flow tools? If not, I'll go back and start covering the differences in the different packages and what we have available.
And whoever asked me, I'm sorry, I forgot to run this live. That's what's happening now. You're seeing it build these boxes live. That's what we're running, a replay. So Kim, I'll turn it over to you. And if there's any other questions, I'll certainly jump back in. But and I'm always open to ideas. So if you guys have any suggestions to make something better or build something or whatever, I'm all ears. So just reach out.
Thank you. Thank you so much. In fact, well, I'll answer some questions about the different tools. I think, I don't know, I think we are so fortunate, and I am so just grateful to these guys because they have built just amazing resources. And we've been able to do them, like I see other things that are out there, and people are, for some of the tools that we have, it can be $1,000 for the one tool or 2,000. Some of the order flow packages are 5,000. We've made these tools available to everyone at very, very reasonable prices. But we really only feel that the tools are as valuable is if you get the proper training and understanding, because otherwise it's going to be just like every other tool that you've bought that looks so good when they're showing it on the screen. And I think that's so important to understand that it's the training that goes behind it. It's the why. It's being able to take it and do the exercises, because as Ray always says, if you can't see it for yourself without the tools, then you're going to miss it. And as the markets change and adapt, you're not going to know when you need to change and adapt and modify what you're using. So I think that's super, super important to go over. And yes, this will be uploaded, Sahil, on our page for sure. And oh, Sarah's asking Greg if you can show the RGL. Sarah, I love those RGLs. I, in fact, I think it was so funny today. Ray was carrying on about he did post that I would probably sent out 1 billion with a B, sent out 1 billion emails on the post for the RGL last night, because they're so good. It's such a nice framework. Greg's original one, yeah, Wayne, it should be in the members area. I can't remember the date, but we can definitely go back and look at that. If you ask me, Sorry about that, guys. I was trying to log in because I was going to put up the, as soon as as Greg gets done, I'll jump over and give you guys. How do you get the indies? Greg wants them. Greg's getting his credit cards ready. I'm only going to charge, since Ray said I was going to send out $1 billion. We should probably just charge $1 million, right? I think I did tell Jason earlier, just $1 billion. I think I'm going to shock you guys, though. How much should we? Let's see from you guys. I know what I think it's worth, but I'm going to give you a super really good deal for the supply and demand. Oh, free for the first 100 buyers. Now, Frank, you're looking out there. Enough so that I can get ingredients for a sheep cake. I like how you guys are thinking. You guys have it going on. Sarah, did that show you what you wanted to see for the RGLs on bonds? It is worth a lot, isn't it? All right, guys, I'm going to jump in here and I'm going to take off these pretty tools so I can switch things over. Does anybody want to see? Yes, it's a Kim takeover. Hey, Graham, how are you? Yes, it's a sheet cake indicator. I like that. Texas sized.
Kim, do you need the screen back?
Yeah,
I'm
kicking
okay.
you off.
Okay, I'm out.
You're gone. And I think earlier, did I see Justin in here saying you did a good job? And I agree, Justin. All of us that, now let's see if let's see, I guess it hasn't yet taken, let's see. It's saying that it's supposed to be showing mine, but it's still showing Greg. So Greg, do you want to stop sharing on your side? Maybe that has to happen first. How nice. I love it. Well, he said you did great, and I agree. Thank you, Justin. I think you did too. All right, as we'd said early, we've already kind of gone through this part, so we'll just keep rolling. How about that? I don't know why I'm having trouble here. It's not letting me advance the slides. I'll stop and we'll start again. Thank you guys for being patient. I apologize. Sometimes this happens when we're doing the switchovers. There we go. I think that should work. We'll see if it will switch over. Oh, there you go, Sahil. Just keep working it, working it. As we were saying earlier, everything we're showing in here is for education purposes. You know, it's always important to always plan your your risk when you're taking trades. I think money management, risk management is so key, and we get so caught up in the profits side of it that sometimes that gets lost. So super important. As we were talking about earlier, we've got the different indicators for TradingView, Ninja, and Sierra charts. So you can definitely, see the difference. Does everyone of you guys in here now understand the difference of why certain tools are only available on TradingView and then Ninja or Sierra charts? Because I think it's super important when you're understanding the different platforms that you understand why we have all the different tools that we have, because they each fit a specific need that Ray has taught. So you don't have to have all of them. Whatever you're working on is, we like to call it right fit trading, because Ray teaches and shows so many different ways to make money in the market. You have to find what fits for you, time of day, your skill set, what you like to trade and all of that. Then you find the right tools that match. So we do it a little different. I think it works. One of the first things that you saw David showing in there, and we have, what I call we call the scalping 6. It's giving you the absorption, exhaustion, the measured move, which I hope you guys could see how powerful that was, being able to have that framework. So if you're doing, the order flow and different, you can use that to know where you want to, if you're in a trade for targets, where reversals could come in, change of behavior, all those different things. So I think visiting and really, if you haven't used the measure move, it's in your package, really spend some time with it. The pressure line, the exhaustion, and the Baltic. So that's, gives you a nice package there to get started. Then you saw on Greg's side, we had the big board, the RGL sentiment indicator. As you know, I love the RGL. It's my very, very favorite thing that Ray teaches every day. I'm shouting that out because I think it's so important, to get started with. Then we've got the new TradingView, the VN supply demand box indicator, and that's only on TradingView. We will have the Skew will be coming soon, but it will only be released initially to people in the room and stuff, because we really feel that you need to have the understanding of Ray's teachings to be able to use that tool. That that's where you were seeing the signals and different things. So you can get, and just so you guys know, we've had these pricings available on these tools for a really long time, because we've never really made an emphasis on our tools, but the packages have grown. And what we found is when people buy these, then they're asking for more and more of the sessions to go in there with them, because you do need to understand what the tools are trying to show you. So we are going to be increasing the packages, kind of sharply. I absolutely say this is a great time if you are in a position where you want to join our group. I'd love to talk to you about what we do, with our daily trade sessions, our daily classes, and really building yourself a foundation where these tools can really get you there. This new intern to pro sessions, the different classes and the structure has been fantastic. So no, Frank, the Greg stuff is not available on Ninja, and the reason it's not available on Ninja is the stuff that he's built, is based around the stuff, the things that you can do in TradingView. Greg's stuff and David's is built around the coding depth of market. So they're two different things completely, and they're built differently because of the things that Ray teaches is the information that Greg is pulling is different than the information that David would be pulling. So totally different types of tools because the information, the data that's being pulled from the teachings require different things. So it's different platforms to make those work. So you can get the Scalping 6, the Pro Starter Package, or you can get the full package, which, the indicators you saw there, like the V-pin and, the different lines that are different things that are in his package as well. There's a lot that's involved with that. So I think that gives you that. And then same thing we have, you can get the RGL by itself. You can get the trade, the supply and demand by themselves, or you can get the full suite. And we did put this together so you could get with the big board. He has some other tools. We're going to be redoing these, and we'll be giving them access to them for those that want to add them in our group. Like I said, price increase is coming. Everybody else, everything that I get, our prices are going up. So I'm like, you know what? We've been at these prices for 5 years or more. Everything is going up, and we're having to add more and more resources and support with these. So we're going to have to do the same. But I think the tools are really, really valuable. And you have to think, these tools are going to be like your assistant and, can pay for them themselves or keep you out of trade. So that's a good thing there. And looky here, look at these good prices. I mean, come on. the Scalping 6, 147, the full package with all those indicators, 297. We've got the big board, 129. The full package is 299, and that does include the VN. You can do, if you only need the supply and demand, if you don't have that, you can get that for $99. So there you go on that. I know. Wow, wow, wow. You were thinking that it was going to be 1,000 or 2,000, maybe even 5,000, weren't you, Frank? So go ahead, get your credit card out. But before you do that, what I really, really, if you're new here to us, what I really would rather you do is schedule a call with me, because working with Ray, you can see the difference. What are these? Both David and Greg have been in the program. They're, have built these tools based around the teaching. So it makes you a better trader being in a group with like-minded traders. We have an amazing community that help each other. We have daily trade sessions. We have our daily classes. We have an archive session. Some of these packages, come with these tools. So it's a better way. So you're getting a complete start with your, and this is the indicators are lifetime. So when you buy them, they're yours. The training with Ray, now, we have that's in, different segments, quarterly, 6-month, yearly, and so on. So if you join now, right, and a new indicator comes along, we do, you would have to pay, it's just the same thing if I go to eat dinner, right? And then I want more food, unless I guess I'm going to the buffet, then I have to do that or get a car or whatever. These guys are adding new tools, but the one thing our members, always have special pricing, and we had never made any of these tools outside of our group until recently. So we're going to go back to keeping, the, super special pricing for our members. And then, for people that just only want indicators and stuff, they'll have to pay different, pricing, having different packages. So yes, you would need to, if we're like once the ROB is available, once the Skew is, those things are available, you would need to, those that would have an additional cost, but only because it's a value add to what you're already getting. And Mark, for the, I don't know which tools you already have, but you can add like the VN, the supply demand levels. You can add that for $99. Yes, the whole package. That's what you can reach out to me. We have a couple different options depending if you're wanting a 3-month, if you're wanting 6 months. All of those things come into play. Super big dollars. Yes. As you can tell, we're really, no, like we did the intern to pro recently, which was 100 days, which is, access to, it has indicators included. It had, a lot of, daily sessions and stuff. And that was to 1997. So we are not, I know, some folks that have similar packages that are $5,000 and $10,000. Ray's wanted everything to be very reasonable. He's looking for people that really want to come in and work and, experience trading at the same level that the professionals do. Oh, hey Ken, how are you? So if you already have the package, the only thing that you would need to add if you want the supply um, and demand, the boxes that he was showing there, if you wanted to add those, that's $99. So super reasonable. Yes, if you'll we'll go back to there here just a second. Like I was saying, also, and anybody that wants to talk about Ray's program, you can reach out to me. I was just going to show, different. Here was Ray saying that I probably is going to send out 1 billion marketing emails just off that. Look at that. Look at the line right there. And then you have the RGL. Look at the bounce. I mean, does it get any better? Come on. And look at, this was something Reeve had given to me, of putting these together. When you have the right information, then the tools just give you the confirmation for these guys. They're able to, it's not just Ray doing well with this. You can see our traders are doing the same, making the monies. When you know what you're looking for, it's easy to get into a trade and put that on. And we did add during this intern to pro, Ray has now added in the trade log, where he shows this in the room. There's teachings on it. He puts them up in the room, so you can add that as well. Like I said, the ROB and the Skew will be coming soon. It will be introduced to our traders, in the group, in the room first. So they'll be able to add that to their trading. We hopefully will have that available for you guys in the next couple days. So if you, I'm going to get with Ray to see when that's going to be available. But like I said, it's going to be initially those two things just for traders in the group. Yeah, Reeve is in each and every day, Frank, as he's in trading. So good stuff there. Like I said, there's the VN, the supply, putting it all together. I absolutely, like I said, I love the RGL. And thank you, Serge. Serge is posting the tools there so that for the order flow suite and for for the trading view tools. I don't know if we have a page that you can go to that has, then you can get both of them. Yeah. Hey, Ian. And Ian has done, and my shout out to Ian as well, because years ago, the first month we were in there, Ian saw the frustration from Ray because, you guys can admit, as retail traders, everybody was worried about their charts looking like his and all of that. And he's like, guys, I'm trying to teach you real stuff here. All you're worried about is your charts. And Ian, quickly said, I'm putting together a group. Guys, do not post any of these questions in the chat. And he's been managing the group, ever since. We've been doing it now almost 10 years, because we started April of 2014. So kudos to Ian. He's kept the groups together. Then we have the groups for the trading tools as well. Yeah, the group is amazing. I think so as well. Yeah. And don't poke the bear. Good advice. Good advice for our guys, for sure. But we just, like I said, we absolutely have the best tools. And thank you, Chad. Chad jumped right in there. He said, give me those tools. But Chad, if you'd like to talk about our group, would love to visit with you as well. But as you guys can see, just the value of, putting this together. But it's not just the tools, it's the teaching. And this is what Rob's going to look like. I think both David and I have been laughing because, Ray wants to make it better. I'm like, how do we get any better? It was 9 for 9 yesterday. And there was the triggers when you get this stuff, when it lines up. It's just building that confidence that you guys need. So absolutely, you definitely want to go to compassfx.com OF-suite, and that's going to give you the order flow tools, or TV for TradingView-suite. That'll give you the different tools that we have available for TradingView. But I also would love for you to put your name in here, or to reach out any way that I can help you to come join our group. You can Skype me, you can email me, we can get together, schedule a call. Let's talk about it, right? Oh, yes, Kevin, the market maker exercise is available if you look in the resources in the members area. I know Serge has posted that in there. Yes, absolutely. Yeah, that would Colin, for those of you not in our group, you just don't, we have the most amazing group. So many guys in our group, really jump in, provide tools, provide, expertise. They help each other. But the other thing that I think they do, as well as helping, is they help hold each other accountable, and encourage each other and answer questions. We just have an amazing group that's willing to pay it forward. So, it's cool when you're coming in as a new student, because, working with Ray is like a fire hose. You're coming into I don't know what would be above a PhD program, but that's what it is. And, it's going to feel a little overwhelming at first, because, you are going to get challenged. There's a lot of things to learn, a lot of ways, but I think Ray's done an amazing job during this intern to pro of, structuring it. We have the quick starts, which go through certain pieces, the benchmarking phase. We've got the order flow stuff, a lot of exercises for you to be able to hit the ground running. You know, many of our traders, Sahil, use both. Okay, but here's what I always tell traders: when you come in, don't feel like you've got to add all these tools. And why? Because you need to master each step. I personally feel that if you're somebody that hasn't, let's say, I'm just going to use this as an example, that you're coming from the FX space where you've been using MT5 or whatever. I think TradingView is a very intuitive, you know, friendly, um, platform. It's a good place that you can get your structure down. You can use volume. You've got these tools. Then what order flow is going to give you is those pristine prices and stuff. So do you want to learn that process? Yes, but trying to do everything all at once. And as it's human nature that when we get something new, we want to get started and we want it to be successful right away. Where I've seen the people in our program that have the best experience and have, really build that success are the ones that come in with more of a plan, and they're willing to take the time to learn each step, master the stuff, and not skip little details. Because Ray's not wanting you to, there's no way you could do everything that he teaches. But here's the great part about what he does is you get to see there's so many ways to, have predictable, quantifiable edges. And because none of us are alike. So everybody has different amount of time, skill set, knowledge, baggage, all of those things, time that they can spend, and you're able to fit something right to your own trading. I'm really looking forward to this coming year. I don't know why. I think we're going to even have more and more traders. We had quite a few this year turn the corner, so I'm hoping for more and more next year. Yes, it's a PhD without that burden, and isn't that the truth? And, as Ian's saying, some only use TradingView and never expand past that. Some only use Ninja, some only use Sierra charts. It's personal preference, and I just can't hone on in on this enough of, you got to use what fits for you, what you feel comfortable, because this is your trading. And once you're moving to live money, you have to be super comfortable and have good knowledge of what you see. But I'm going to go back here to this slide so that you guys can, well, it's not allowing me to go backwards. I don't know why. There we go. We'll put it here so you can see these different indicators. So if you're wanting the TradingView stuff, it's the TV suite. If you're wanting the often, would be your order flow and so on, that's going to be the OF. And if you're wanting to come in and join us to be able to have all of this stuff, reach out to me. Love to speak with you. I'm going to go ahead because we've obviously been going for a bit here, so I will stop the recording so give me just a second, but we definitely want you to come in. We are taking these prices, so if you're hearing this later and you go, but wait a minute, in that recording, the prices were this, but they are changing. They're going to change. And that's not just scare tactic. They really are, because we keep adding more resources to them, so we've got to do it. So get in while you can. Oh, and real quick, if you are joining, we do have instructions for what we'll need. If it's Sierra charts, we're going to need your account name to get you activated. If it's Ninja, it's going to, we'll have to have your third party key. If it's TradingView, your name. not your name, but your account name, so that Greg would be able to send you to your invite-only scripts. Anyway, reach out to me, Kim@compassfx.com. Skype, you can Skype me, ForexKim, ForexKim. Email me, Kim@compassfx. Happy to help any way we can. We appreciate you guys. I'm going to keep answering questions, but I'm going to go ahead and stop the recording. Thank you guys. All right, we can answer all these questions. Yeah, the often suite is either